Judy, thank you. So, welcome everybody to the Finance and Services Committee meeting of the 6th of March 2025. In the room we have Councillor Strange, Cookson, Downard and Clarkson. The next item on the agenda is the health and safety schedule. Sorry, Karakia, sorry. Go back a step. Janine, I'll ask you to give us a Karakia, please.
Nei morena koutou. Whakataka te hau ki te uru, whakataka te hau ki te tonga. Kia mā kina kina ki uta, kia mā tara tara ki tai. He hiaki ana te itakura, he tio, he huka, he hauhu, tihei, mauri ora.
Thanks very much, Janine. All right, so we'll get back to where we were. Health and safety. Is everybody in the room very familiar with those, so we can take that as read and understood. Apologies from Student Ebone and our chair, Pam. Thank you, Bruce. Seconded from Mike. All those in favour? Aye. Against? Carried. The agenda's been circulated. Could I have a mover for the confirmation of that, please? Thanks, Robbie. Seconded. Right, thank you, Mike. In favour? Aye. Against? Carried. Thank you. Disclosures of interest. Anybody have any new disclosures to make that have not already been tabled in accordance with our standing orders? If not, somebody like to move the disclosures of interest? Thanks, Robbie. And Bruce, second. Thank you. All in favour? Aye. Against? Carried. And final bit of housekeeping is confirmation of minutes of the last meeting, which was held the 20th of November 2024. Robbie, thank you. And Mike seconded. Thank you. In favour? Aye. Against? Carried. All right. So we can now move on to item page 7.1, which is the Ara Tupu performance updates. And Emma, you're in charge. Thank you. Welcome to the meeting. Okay. When do you want to shoot your film straight after this? Okay.
Screen share with you. Apologies, it's just disappeared. Kia ora koutou. So I'm just going to cover off on the Ara Tupu performance today, and you'll see that in our dashboard our February data has just been updated. It happens in the first week of the new month. So that will look slightly different to what you've seen in your report. I also have Kim here, Comms Manager, who will be providing a detailed performance overview of the comms channels. So it's good to note overall that performance has improved with the Ara Tupu focus areas, primarily in the culture focus area. So we'll have a look at that first. This improvement has occurred mostly due to the release of the new pulse results, which was late last year in October, November. You'll recall previously we were looking at 4 of our measures being on track. We have now got 7 of those measures on track, which is good to see. There were some changes made after our April pulse results came out, including the Infor consolidation project, which seems to have really picked up that overall well-being of staff. And this is reflected in the specific measures at the organisational level, having the largest improvements noted. Also to note at the moment that our Pulse survey is under review, and so we're just making sure that the purpose and scope of the survey that occurs every 6 months is still fit for purpose. And that's been done by our social sciences team. Looking now at our customer area, this generally performs quite strong across the board. One thing that has happened in our customer area over the last few months is that our Transport Directorate, RTC, has just come on board in a couple of the new measures. So that's the response rate and complaints. I think they have a little bit of a grace period as they adjust to the slight change in their business processes, which has occurred so that they can align the way they respond to their inquiries the same way that the rest of the organisation do. So we have seen a slight dip in the response rates for January and February. And again, with our complaints, which is the other area they're reporting into, has seen a slight increase, well, bit of an increase in the complaints. I have looked into this very briefly because February results only just came out, and they have told me that it's down to the increase in usage on the buses due to the start of the school year. And so there's been a bit of pressure on the transport network. Yeah, so it's following trends, which is good. It's nothing random. Now, excellence focus area, we'll move on to that now. We have a really good uptake in the active projects in SODA. This is a direct result of the work that Non-Such has been doing with the organisation to capture the projects and the change that is going on in the organisation. So that's really good to see, and it's providing more oversight to those projects as well. In our Te Korowai implementation plan, we are on track with this. You would have seen in the report that some of the measures have required to have due dates pushed out, and that is just due to other things needing to align before those actions can be completed. But it is good to see that we're already 55% of the way through the identified actions with that. Our innovation area, this area is very staff driven. So when staff have completed something that is innovative, they then can go and input this into the innovation portal. So it does fluctuate the use of the portal, and ICM is definitely standing out, I guess, in the number of innovations that they input into the portal each month. One of them I highlighted in the report, but I think you're going to get a more detailed look at that at another committee, so I haven't brought them in to present on that today. The Te Ao Māori focus area is also performing well. Some of the changes that have occurred in here is that we have got our latest results for the cultural competency survey. And one thing that we found interesting was that as the organisational cultural competency elevated or lifted, individuals felt that their perception of their own cultural competency had actually decreased. So that was something interesting that came out of that survey. And the changes that tairanga whenua are taking in this space moving forward is, instead of an action plan for organisational wide actions, they're now targeting directorates individually, so they can tailor plans specifically for that directorate, as each directorate has different requirements in that space. I will now hand over to Kim, and she is going to talk to the communications channels.
Morena, councillors. We thought this month we would give you a bit more detail around how our communications channels are going over and above what you see in the dashboard that Emma covers. So just very quickly, in terms of our website, I'd like to draw your attention to a new metric that we can now report on for our website, and that's around the engagement rate. So previously we were only able to look at what the bounce rate from the website was. Now we're actually able to look at how engaged people are when they're actually on our website. So we have a really good number of users and page views, but on top of that, you can see that we have a really good engagement rate. So this shows us how long people are spending on pages and the number of pages that they're actually visiting when they're on the site, rather than just coming in and bouncing straight out. Benchmarks are always really challenging to find, but there is no government benchmark rate for websites. But when we look across industries, a good benchmark for engagement rate is 55%. So you can see that we are well above that in terms of how people interact with our website. In terms of our social media channels, there are 3 main channels that we're using: Facebook, Instagram, and LinkedIn. A key milestone that we hit in December was that our Facebook followers topped 20,000 people. So that was a really good milestone for us. In terms of our engagement rates on our social media channels, the channels generally are performing above benchmark. And the exception to that is our Instagram channel that you can see there is across the this reporting period has been performed under benchmark. However, we have been trialling lots of different strategies for increasing that performance, and I'm pleased to be able to let you know that in September through to December, in those 3 months, we had increased engagement rates on Instagram, so we will continue to trial new tactics there. Our top performing post in the 7 months that we're reporting here was around the Ohinamuri incident, and you'll see in the report that we provided that that incident not only those posts not only reached a lot of people and had a lot of engagement, it also resulted in a lot of new people following our channels. Across all 3 of those channels, we had good growth in that month. In addition to the media releases that we put out, we supplement those with storytelling. So we have a lot of stories that we write that are more focused on really explaining the work that we do, and in particular the work that we're doing with other organisations and community groups. In total on the website at the moment, we have 138 stories. In this reporting period, 33 stories were posted. But when we look across the 138 stories that are sitting there in this reporting period, just under 5,000 users viewed those stories over 8,000 times. And in terms of advertising, in the summer of 23-24, we launched a new type of campaign called Pass It On, which is really about getting people to share messages that we have across their own networks. These campaigns have been really successful, and since that first initial summer campaign, we have then run Pass It On Winter, Pass It On Wallabies, and then again this summer, Pass It On Summer. And Emma. And again, in terms of the metrics that we track, all of those campaigns have tracked really well, both in terms of reach, but more importantly, engagements. So we optimize these campaigns to try and reach people who are more likely to comment on them, share them across their networks, follow our page as a result of it. And those are the engagement rates that we've had through those campaigns, all of which had hit benchmark with the exception of the summer one, which was very slightly under the benchmark of 1%. And again, that was Instagram just slightly underperforming. So that was a bit of a quick fire round of how our key channels are performing. Then question.
It worked. To that onside, a good one now for South Africa. Just the 5. 44, the 1279 before.
Sorry. Sorry, Emma. You can,
Were there any questions at all?
Yeah.
yeah. Robbie, question.
Thank you. The innovation, when you said most of it was coming out of ICM, is that from the field or is that from?
It's from various things that they're doing. So I think they're just a little bit more engaged at their manager level with the innovation portal, because it is self-reporting. So it takes reminding and I guess motivation to report.
Yeah,
into
because
that
all I
innovation
just,
portal.
like ICM has field staff where transport
Yeah.
doesn't. So the interaction there is going to be all management to the portal, where ICM is going to have field staff and people in the field that's putting ideas into it. So it's not going to work the same for those two groups.
Yeah, yes.
So that's the point I was trying to make out of that. Yeah. So it's highly
Some-
likely that ICM is going to use it a lot more.
Yeah, some of their innovations are admin-based innovations too. So
yeah.
reviewing the way that they deliver things to their customers
Yeah,
at the front desk
be-
as well as.
It'd be just good to make, if you're going to report on it, what area it's coming out of ICM and what area. So then we can measure that it's sort of innovative if it's coming out of the staff in here, or if it's coming out in the field. So then it's relative.
Okay, yep,
I
sure.
think that might be a good, that might take the over-representation out of ICM out of it. That's all. I think that might be a good point.
Thanks.
And
Okay.
and the other one would be the ones on LinkedIn and the other and Facebook and that. Quite a bit of what I've been seeing lately, there's been a bit of the good reviews are good. I just don't know if we're publicising the bad ones correctly that I've seen on like our prosecutions. I don't know if we're really dealing with that the best way possible still, but it just feels like it's like we should put that on a different media place, that all our good stuff's in one place and our bad stuff somewhere else. It's just so it doesn't sort of contaminate us, that we're the, does that make sense? I just, sometimes I feel like we had a good one come out with what my committee did the other day, ICM, and a couple other things I saw on Facebook and other things. And then yesterday the tourist sand thing turned up and it just bangs straight in your face again, So I just don't know how we should actually present ourselves in that, if that's the right way. But that's just my point of view anyway. Thank you.
Thanks, Robbie. Yeah, look, I'd just like to comment on the report. I think it's comprehensive and the trends are very positive. So thank you for that. And just responding to Robbie, I don't agree that we should be trying to warehouse stuff which is not favourable. I think we've got to take the good with the bad. And it's only when you do that you actually get a fair measure of the performance of the organisation. We shouldn't be trying to hide stuff. That's not the way we are. Well, okay, however you want to track it. Anyway, so thank you both. Angela.
Yeah, thank you, Chair. Yeah, thank you both for the report. Interesting reading. Just following along from that around a balance of feedback. We talk a lot about complaints. Is there another avenue for compliments as well? And will they be reported through this report? And also complaints is quite a negative connotations. Is there feedback, suggestions within that? Or is it all taken as if someone puts something on antenna or something like that, that it's automatically negative if they're contacting us?
Yeah, so with our complaints that get recorded into Te Ara Tupu, they are filtered so that it is definitely a complaint, a solid complaint, and every complaint is responded to and followed up on. So I check at the end of every reporting period to make sure that the complaints we're reporting on have been followed up and closed, or if they're open, then there's genuine reasons for them still to be open. And any suggestions of improvements are given back to those teams that they are associated with. And that's a good point about compliments. I haven't delved too much into the Ask Nicely compliments for this committee because our NPS is generally quite good, but I think that's a good point I could balance out and maybe bring forward some of those trends in the compliments as well.
Yeah, I always think it's good to know, not just the bad stuff, but to balance it out with what the team and staff do an amazing job. So yeah, would be good to have that as well. So thanks for that, Emma. The communication, reaching that many followers on Facebook and across all the platforms that you are working on. The quality of the work that is coming through on those communication channels is really positive, and does show a full picture of the work that we do and the extent of the work that we do throughout the region. And I think it's good to be able to show the community all the different aspects of the work that we are doing. So yeah, thank you to you and the team for that. So appreciate it. Thank you.
Mr. Chair, can I just add around the feedback and complaints information that there is a report done once a year from the customer team to the Risk and Assurance Committee that provides a view on sort of that longer term trend as well. So in addition to what Emma's doing here through Te Ara Tupu, there is that annual once a year reporting through the customer team specifically.
Thanks, Janine. Bruce.
Yeah, thanks for the report. I'm always interested in relative performance of different platforms. Just wondered if you could give us some insights because you're using such a wide variety of platforms. And are you changing emphasis, or are you just sticking with the same platforms or evolving? What's the general approach in relation to the range of platforms we are utilising for this communication?
We are always constantly looking at the platforms that we're using and making sure that they are giving us the best reach and also enabling us to have two-way conversations with people. We did have, and we still do have, a Twitter account, but that, for instance, is an example of a social media platform that we are no longer using. So we have not closed down the account, but we have definitely moved away from using that platform. We are constantly looking at these metrics to say, are we seeing changes that we need to respond to, and also looking out to say, where are the trends going? What's going to happen with these platforms coming through, and what do we need to be working on now to be able to move to the next platform? So we are at the moment looking at a range of things, and that includes our own website. So we are looking to make some changes on our website that enhances even more the experience that we have, and also looking at how we use YouTube better, because there is a big audience there that we are not tapping into as well as what we could. So we are always looking at that. We have to also keep in mind the resource that we've got to be able to use these channels. And so we want to have the right channels, but we need to be able to manage them. So we wouldn't be able to manage more channels than what right now and do them well. We are looking to target things better because the channels do respond differently. So what people want to engage with on Instagram is different to the audience on Facebook. So we are looking at it might be the same content, but it might be presented in a different way. In some cases, it's different content.
So if I may just follow up. So yeah, and obviously different demographics apply to different platforms. And I'm assuming they do. So I've got a sense that Instagram is more of a younger person's site than LinkedIn, for example. But I'm also wondering about, you know, when we use the term engagement, that's quite a crude measure of the time that people spend looking at stuff, but we don't really know what they're getting out of it. And I'm interested particularly in, seems to be an evolution going on at the moment where LinkedIn is a better way to get credibility for an organization. You know, to actually, stories on there tend to actually engender real depth of debate about why we, you know, what we're doing and why we're doing stuff. Are you you're sort of looking at that aspect as well?
We are, yes. So again, the different content strategies for different platforms. So the LinkedIn audience is very different to the Facebook audience. They're still important audiences, and we obviously have a much larger audience on Facebook than what we do on LinkedIn. But you would have seen in the report that, as you're saying, LinkedIn is a much more engaged audience than what Facebook is. So that is definitely part of the things that we consider around our content strategies.
Oh, that's really good. Thank you for that. Thanks, Chair.
Okay, thanks, Bruce. All right, so everybody happy with the discussion? So we've got a resolution. Do we have a mover? Thanks, Makao, and Angela seconding. Thank you. All in favour? Against? Carried. Thank you. Kim and Emma, thank you very much for your presentation today. It's much appreciated. Thank you. So the next item on the agenda is Makao Investment. So we've got Noah and his new man, Luke, is it? So welcome to the meeting, Noah and Luke. The floor is yours.
Thank you, Mr. Chair, and good morning to all the councillors, everyone. Great to be back here. We have two agenda items. One is to give you an update on performance. Luke will walk you through performance in a minute, and then we also have an updated draft of the statement of investment policies and objectives that we would like to get feedback on and discuss. But before I do that, just quickly want to introduce Luke. So Luke Longdale joined us in October as a consultant. He previously worked with Craig's Investment Partners, and before that at Southern Cross. Luke is based in Rotorua, lives with his family in Rotorua, so we're ever getting a little bit closer to the region as a business. And he will support John and me in working with a series of clients, including the council. So with that, I'd like to hand over to Luke to run you through the quarterly report.
Kia ora all, thank you. We'll start on page 1. Presume you've got it in front of you. You're able to see, perfect. So the top left is just a quick reminder of the return objective. So that's for inflation plus 3%. And then down the bottom left, you can see how the portfolio has tracked against that objective. And pleasingly, the portfolio has done very well in the last calendar year 2024, and it's performed right up to where the target should be, which is great. The top right, just a couple of observations over the last quarter. I won't go into those in too much detail, but a few of them, equities have performed very well, and in particular, unhedged, USD denominated assets have done very well as the US dollar has appreciated against the New Zealand dollar. And conversely, real interest rates in the US, long-term interest rates have risen over the quarter, and that has had a bit of a negative impact on fixed income and real assets. We flick over to page 2. You can see the portfolio value up the top left, and it's great to see in the last quarter that did end up over 100 million, so it's a great milestone. Acknowledging there has been some volatility recently, but yeah, to finish over 100 million at the end of December is a great figure. You can see some investment gain there of almost 1.3 million. And if you go to the next column over, looking at a year, you can see that strong investment gain of 7.5 million. Looking down further, you can see the asset class breakdown. And again, Noah will touch on the change in the SAA and the change in SIPO. That is the previous, or the one that was current at the end of the quarter. But pleasingly, the portfolio was at its target, that 60-40 split, so 60% invested into defensive assets and 40% in growth assets. So that's the key thing from a risk return perspective. Looking over to page 3, you can see how the portfolio returned. So again, the top left, you've got the quarter performance, pleasingly both above benchmark and above the target. Looking at a 1-year figure, you can certainly see the strong performance over that target. It outperformed the target by over 3%, which is great. Looking down, you've got the attribution analysis, and you can really see where that performance against benchmark has come from. Largely, that's been driven from the asset allocation. So the portfolio was slightly overweight equities, which again performed really well. Working to page 4, I won't go into too much detail because there's a lot of numbers there, and the portfolio is changing. But again, you can see some of the strong performance from the equities. So global equities has done well, Trans-Tasman equities. And if you look a bit further, some of the bonds, fixed interest have struggled a little bit more as those yields have risen. But pleasingly, they've kept up with their benchmarks. So we're happy with that. Page 5 shows the managers, and unless there's any particular questions from the council, I won't go into those in too much detail because again, a lot of those are changing going forward. But pleasingly to say, most of them have kept up with their benchmark. There have been some that have performed higher and lower as you expect, but generally they've done well. And again, we're changing some of those going forward with the new SAA and the SIPO. Any questions on that quick run through?
No, I'm happy just to say I think the performance has obviously done well, reflecting the market conditions at the time. I'm more interested in knowing when you've made the switches across to rebalance the portfolio, and because the timing of that's pretty critical, the way the markets have been moving around of late.
Yes,
and I know you can't try and pick it at the right date, but yeah, just any comments that you might have on that.
Yes, so we're pleased to confirm that the new asset allocation has been implemented now in the first quarter, and would like to thank staff at the council as well for the assistance in terms of making sure that all these investment changes are done effectively. So yeah, pleased to report that as of now that the new asset allocation has been implemented with all the new managers.
Excellent. Thanks for that, Noah. Do you have any questions? Carl, you go.
Yeah, sorry, Mr. Chairman. Yeah, just on your investment objectives you had, just for my ignorance, because I'm not, while keeping the risk to a 1-year return of minus 15% per.
So that's sort of, I guess, a really bad outcome. You'd have to accept that in a really bad year, there potentially could be a 15% downturn in the portfolio. So that's sort of, I guess, never say the worst case scenario, but that would be a really bad scenario, and we want to keep that to a minimum. That just gives you a bit of an idea of how much the portfolio could drop if we were in a really severe financial crisis.
Maybe if I just add to that too, that is a consequence of the rebalancing. We've taken on greater risk by moving from the 40-60 to 60-40 in terms of growth assets as against defensive assets. So that's increased that. And that was part of that discussion that we had earlier on when Makao took over the management of the fund. So yeah, it's a fact of life. You take on higher risk, you take those numbers increase. So anybody else have any questions? If not,
Sorry, I just saw, because I've heard on media, how Kiwis say that could be affected with what Trump's doing. How much do you foresee that's going to affect our investments? Or is it crystal ball stuff?
It is a bit of crystal ball, just because it's quite volatile at the moment in terms of tariffs are on, then they're taken off. Then there's an exception for the auto industry. So it's quite a volatile situation. But I think I've commented on that at the last meeting. That definitely is sort of a trade war. If there's really an escalation of a trade war, that probably would be in the short term a bad outcome for financial markets.
And like I think we tend to watch the markets every day, and you shouldn't do that because this is a long term. This is a generational fund. So what happens yesterday and what happens today, which are two polar opposites, shouldn't affect us. So thanks for that. Now the next item on the agenda, well, part of this discussion, and the same general item, is our SIPO, and the amendments that have been made to that. Janine's passed out a marked up version, so the changes were actually included in the agenda items. Just one point which I'd like to raise, I think it's on page 58 in our agenda. That's in relation to our top-up provision. At the moment, it's based on inflation each year. And I had raised at the time when we were just doing our long-term plan discussions about if we're just doing on inflation, then because we're having growth each year in the number of ratepayers, we're actually diluting the benefits or the effect, if you like, of that inflationary top-up. And I had thought that we had agreed to put that in, but Janine assures me we didn't. I'd just like to put that on the agenda for future discussion, that I think we need to have the inflation plus the number of ratepayers as a top-up provision, so that it's equitable for all ratepayers. Otherwise, they're being diluted by the new ones coming in. That makes sense or not?
Yes, yeah. I guess if you want to treat everyone fairly, then ideally you want to make sure that, I guess, your rate subsidies grow in line with population growth as well. Not sure whether you want us to redraft the current SIPO or whether this is for a future discussion.
That's up to Janine, really.
Yeah, so through the chair, I think we could accommodate that through the SIPO. It's just under the distribution policy where we reference 1.9 million for 24-25 and thereafter inflation adjusted. If we just say inflation and growth adjusted, then that would, I think, address that for the information of councillors. So our current assumption around inflation proofing of the fund is sitting at 2.6%. CPI is slightly lower than that. And the growth projection, obviously, that we use in terms of increase in the number of ratepayers is 1.5%. So it would be those two factors combined. I think given the recovery that we've seen through the fund, through both market performance, but a slightly more conservative distribution for rate subsidy, we've seen that recovery in the equalisation reserve, which probably makes me more comfortable that we're sort of spending a little bit more, essentially, because that will slow down the rate of transfers into that reserve moving forward. But I think we've made, so far this year, good progress on that. And I think in terms of that equity conversation, being able to keep pace with the subsidy as we have more ratepayers in the region makes sense, while still it's acknowledging that it's an intergenerational fund.
Thanks for that, Janine. Does any other councillors have comments on that?
Just support it.
Yeah, thanks,
If it's not growing with our population, then it's just diluting.
Yes, well, that was my point. So it'll have to go to council or just a
Yes.
recommendation from the finance committee. So
Yes, yeah, it will. So we can update it for that, and there'll be a small impact of that that we can pick up through the chief executive submission to the annual plan to adjust for that value as well.
thanks, Janine.
Even in the future, it needs to grow much bigger than what it is now at some stage. Yeah.
Well, if it's included in the SIPO, it'll flow through.
Okay, we're happy to make that amendment in an updated draft.
Right, thanks, Noah. Any other comments, discussion? If not, we have a resolution. We have a mover for that, please. Thanks, Bruce. Thanks, Angela, for seconding it. All in favour? Aye, against, carried. So with that, I'd like to thank both Noah and Luke for your attendance here today and let you get on with
Back on the
whatever else you have to visit. Hopefully, we haven't held you up too long. But yeah, thanks for being here. Much appreciated. And we look forward to continuing excellent returns.
Just Chris, if they actually invested that money in the community, how they were going to give a small dividend to community groups in the Waikato, and which ones did they give money to? That was a part of our policy when we.
That was off their fee, so
Yeah.
I can follow that up.
No, it should be, but who actually they gave there?
Yep.
Be nice to know, because I think Lifesavers was one of them.
Yeah, absolutely. Yep, I can follow that up with
Good
them.
point, Robbie. Thanks. Right, next item on the agenda is the Treasury Manager monitoring. And Janine, I think
Yeah, that's me.
your turn.
My turn. Thank you, Mr. Chair. So this report really naturally follows on, obviously, from the information that Makao have provided, but just a little bit of a different view in terms of the analysis and performance of the fund. Noting, as Noah had said, well, it's actually reflected in here in a non-compliance with our counterparty risks, so having more than $40 million with ANZ for a period of time as we have been working through the investment fund transition. So all the funds have been liquidated, put into a call account, and then divested out to the new fund managers. So that left us with a little more cash than the policy allows for in ANZ for a short period of time, but that has since been corrected. As of last week, the final placements with the new fund managers had taken place, so that new strategy is fully implemented. In terms of the external borrowing program, which is the other element of this report, just noting projections, we're sitting at 39 million of actual borrowing at the moment, with the annual plan originally projecting that to increase to 64 million. In reality, from a Treasury management perspective, the way that this process is working with staff at the moment is we're spending down on our working capital funds, and it's only at the point that we exhaust those that we're undertaking borrowing to meet cash flow. I had a conversation with PwC yesterday, who are our advisors in relation to the borrowing program, just in light of what we're seeing in terms of forecast rates from the LGFA versus the term deposit rates that we've received recently, of sort of asking, is it better that we actually gross up our borrowing program and hold our real working capital funds through term deposits? And there is a slight benefit to council in doing that. So over the next couple of weeks, we'll look at that full year borrowing program and likely place some more borrowing with the LGFA, which will increase borrowing, but we'll be able to use that and invest over into short-term term deposits. So we're getting a return on that as well, with, like I say, that small gain in the middle of the rate differential between borrowing and investing. So that's just one, I guess, explanation of why our borrowing is lower than forecast in the annual plan, but equally what we're intending to do about that. But other than that, Mr. Chair, happy to take any questions on that report.
Thanks, Janine. I've got a couple of questions. Under point 5, this money which is being managed in-house,
Yes.
does that vary? Should some of that be moved to Makao Group as a permanent investment, or is that used as part of your working capital?
No. So under the previous strategic asset allocation, 50% of the cash portfolio could be managed in-house by staff. So that's that 15 million. and that was effectively just managed through a series of laddered term deposits. We were finding we were able to get better returns in the retail market than even the fund managers were providing through their processes. So that was why that had happened. Obviously, with the new strategic asset allocation, the cash portion of the fund reduces, so that will move across into those other asset classes.
Okay, thank you. And my other question was, just bearing in mind what you've just mentioned to us regarding this move to borrow more, keep the working capital up. Just conscious of the fact that once we got over a certain figure, I think it was 60 million under the old
Credit
interest rate
rating.
regime, we should be looking at having a rating agency assessment, certification. So I'm just asking that we keep that in mind. We obviously aren't there yet, but it's a possibility for the future. I know there's a big cost involved with associated with that, but I'm just signalling that I'd like to think that we are monitoring that.
Yes, absolutely. That's an ongoing discussion with PwC. I think the sort of the break-even point cost-wise is around 60 million, where it's advantageous for the administration cost for the credit rating versus the gain that you get on the borrowing. So we've discussed that with PwC, and we had representatives from the LGFA in a couple of weeks ago as well, and mentioned it to them as well. So
has that figure changed at all? Like I would imagine with interest rate changes, was the margin remain constant?
Yeah, I think it's on the having a credit rating gives you a certain reduction in basis, a set reduction in basis points on the interest rate. So that calculation will stand.
So that doesn't change?
No.
Carl?
Yeah, just to follow on through that second question that you had, Janine, was it through that consultation with PwC that you came up with the 3 million that you're paying back off that forecast? There's a mention of 3 million in there. How did you come to the 3 million? Is that to bring it down to the 60 million?
In terms of from the borrowing, so that's around forecasts, reduction in infrastructure capital, which has a borrowing offset to it, as well as some key projects that are supported by borrowing where they're deferred. So it's a deferral of that borrowing rather than a permanent
Paying
reduction.
Down 3 million.
Makao, any other questions for Janine on the Treasury management? Janine, do we have to report the breach of with the ANZ or not? Is that
so we need to report it here. So
here.
The council, so the committee's aware of it. Yeah.
Okay. So if there's
it's an internal policy.
No further questions, resolution. So Makao, thank you for that. Robbie, seconded it. All in favour? Aye, against? Carried. Thank you. All right, Janine. Financial performance monitoring.
You've got David Green here, who's the financial planning reporting manager. So I back up.
Morning, Mr. Chair, councillors. So yes, I'll quickly share some headlines from the Q2 year-to-date financial performance and some of the key drivers for the changes around the second quarter forecast. We'll jump straight in. So in terms of Q2 year-to-date, we see ourselves with a net operating surplus of just short of $6 million. That's 6.6 million favourable versus the original Q1 forecast. Once we adjust that for roughly $8 million of transfers to reserves, we see a decrease in retained earnings of around 2.9 million. That strong performance versus forecast is driven by both favourable factors in revenue and expenditure. On the revenue side, as you've just heard, there's been very strong half-year performance on the investment fund. Coupled with that, we've seen higher public transport fare revenue, and I think we've discussed that in various forums over the last few weeks. And as well as that, there's been other income that we haven't had forecast coming through funding from ICM and the flood space as well. Partially offsetting that, we see on a year-to-date basis an unfavourable variance in our rates revenue of about $565,000, and that's now reflected as an underrun in the forecast. From an expenditure perspective, there's been a much lower use of contracted services. And again, some of these factors we've talked about through the various forums recently, in particular with respect to the delays in the Iris NextGen program. So this year, the funding won't be spent, but that will be delayed until next year and later years in the program, as well as Plan Change 1 and various projects within the science and policy space. Coupled to that, there's been materially lower interest expenses so far to date. That's as a result of the lower borrowing program and the OCR impacts as well. And much lower operational capital depreciation, again, due to delays in projects and things. Year to date, we also see $355,000 reduction in open text software costs. This was due to an upgrade that was planned this year that's now been pushed and delayed to next year. That's included in a carryover proposal. In terms of infrastructure capital, at the halfway stage of the year-to-date spend plus the commitments of almost $6.5 million represent 49% of the current full year forecast, just short of $20 million. Our Q2 forecast sees that reduced by a further 700,000, 600,000 of which is proposed as a carryover due to rephasing of lower Waikato renewal projects. And it's worth noting that, as we're in the midst of the busy construction season, January has seen a huge actual spend of $1 million. In terms of the Q2 forecast, the summary is in your report. I guess some of the key highlights to note and some of the key drivers for the changes here. On the expenditure side, this now reflects the $2.6 million write-off with respect to the Healthy Rivers software that we've discussed in other forums as well. As well as a revenue perspective, again, now we're reflecting through some of the things that we've seen come through in the first half of the year, the higher public transport fare revenue, there's net increases in funding, and various other factors driving these key changes. The report also references and talks to the prior year surplus. So that, just to note, has been adjusted slightly versus the previous figures that have been quoted. That's as a result of the requirement for the Healthy Rivers drawdown on the prior year surplus, previously reported at 1.448 million. That's now down because of the depreciation that was previously funded. The other items for Porta Tahara and freshwater clams you are well aware of. And finally, then, just the proposed carryovers at this point in the year. In the previous quarter, we highlighted 2.35 million on the infrastructure capital side due to delays in the Island Block pump station. There's a further 600,000 identified in Q2, and that's due to external delays in the lower Waikato stop bank and Island Block projects. From an operational capital expenditure, again, another topic that we've discussed previously, we had in the plan for this year $690,000 budgeted for the real-time passenger information displays. Our share of that has obviously been proposed to be carried over to next year. And from an operating expenditure perspective, the full year cost for the open text software upgrade will be rolled into next year, 900,000, and approximately 955,000 is due to the delays in the Iris NextGen program. So, and again, some of the things that we're continuing to focus on through the forecast and into next quarter's forecast, a detailed review of the full year rates revenue that we see, an in-depth look at our interest expense and interest income, as kind of touched on previously with our reduced borrowing requirements, and the depreciation of our capital programs and our projects begin to finalise as we head towards the end of the year.
Right, David, many thanks for that. Just a couple of points that I have, and Janine's indicated to me already, but I think it's already that you are working on this, understanding the reason for the rate shortfall, but I think it would be useful for other councillors to be aware of that as well, because historically, I think projections have been pretty accurate. So it would be nice to understand the reasons for that and share that with us. And I think that probably is quite important too, particularly coming into the annual plan approval, because we want to have some certainty about those numbers.
Absolutely. So that's the work that's happening in terms of before we actually finalise budgets and set rates for next year. Really need to understand why we found ourselves with a shortfall this year, because it's certainly not something that we can sustain moving forward, and it's not typically what we would see based on the rates modelling work that we do. So, a real focus to nail that in the next month.
All right, and the other issue, and you may not be able to answer it, Dave, but there's a significant, I know you did briefly cover it off, and that's the degree of capex which has to occur in this quarter. Are you comfortable that that's going to be delivered? I know it's not your responsibility to deliver it, but you must be getting the feedback in terms of your capital management, cash management, and that, just where the team's at in terms of delivering on that.
Yeah, so the feedback that I've had, given the commitments that are already in place, and I understand they're increasing and have increased. Obviously, this is as at December, so those capital commitments have increased over January and into February as well. So the programs themselves, yes, there are challenges. They are looking at how to manage those, but the indication is that they remain on track.
Okay, thank you. Because we've got a track record of under delivering on those things over the last couple of years.
If I could add to that, I think the challenge is probably not so much with the major projects, it's with the more operational capital, which in some zones accounts for, like a third of the capital expenditure program. That's the stuff that should actually be able to tick over quite nicely, but I think probably in some ways gets, impacted by depending on what other major works are happening. So I think a lot of what we're seeing is in relation to the major programs as opposed to that sort of operational level. But that's why the change that we have made for the reporting through this cycle is actually to show you, previously we've only shown actual spend and picking up that commitment, so we can actually see what is planned and committed or contracted versus the total budget, to try and sort of get a better sense for, what are we ready to go with, and what's the value of work that yet needs to actually be contracted in some way, shape or form. So that's what we've sort of tried to add in terms of the information that we're providing to you.
Janine, have you got any comments additional to what David's already passed on? Like the performance to the end of December is promising. It's ahead of budget, but it's too early to be. That's going to flow through.
So through you, Mr. Chair, and we'd sort of had the conversation before the meeting. Very quickly, off the back of this approval process, we will be kicking into the third quarter forecast. Very much following the discussions at the annual plan budget meeting around the prior year surplus position that we found ourselves in at the end of the last financial year. There's been some really clear messaging with the executive team around the degree of rigour that's needed in that forecasting process, so that we're going into the end of the year, we're going into the annual plan process with a reliable view on where we think we're going to end this year. Obviously, there are some factors that are outside of our control, but we, should be flagging those areas of uncertainty as well. So, that's the focus over the next week period, is to make sure that we are doing a really thorough job across the organisation on that third quarter forecast result.
Thanks for that, Janine. Questions, Makao?
Mr. Chair, not a question. No, it's just a comment. Just the good news in this is, for me, is that $7.75 million rated favourable for the public transport on the fares increase. I thought there would be, a bit of a downturn on, people's resistance, because I think it was about 20%, I think, was it, increase. So, I mean, that's, because we've got quite a bit coming to council in the PT this year. So I think that's a pretty good result.
Yep, definitely. Thank you. There's no other questions. There's a resolution there. Can I ask for a mover, please? Thanks, Bruce. Seconded. Thanks, Robbie. All in favour? Aye, against, carried. David, thanks very much for that, and Janine, appreciate it. And may the good news continue. Right. The next item on the agenda is second quarter non-financial performance results. And Jane is going to join us to tell us all the good news here.
Good morning.
Welcome, Jane.
Thank you. So this report is presented for information, and it just provides the committee with an update on council's non-financial performance at the end of quarter two, so 31st of December 2024. There are 50 non-financial performance measures in council's long-term plan. At the end of quarter two, 6 of these are not currently applicable, meaning that either we have no work scheduled or no data is yet available. Of the remaining measures, 3 targets have already been achieved. 38 are on track to be met by the end of the year. 2 are being monitored and 1 is off track. The measures that are being monitored are for civil defence, the percentage of staff trained for activation of coordination centres to an intermediate level, and for public transport, on-time departure from bus stops. As noted in the report, plans are in place for both of these measures, and the targets are forecast to be met by year end. The measure that's currently off track relates to the development of a regional resilience strategy and plan. This work has been prioritised in quarter 3 and is expected to be recovered before year end. However, as noted in the report, there does remain some risk around this measure, particularly around time required for appropriate stakeholder engagement. I'll leave it there unless there's any questions. Thanks.
Thanks very much. That's short and sweet. And I guess, yeah, excellent results to date, and hopefully we're going to get there 100%. Anybody have any questions? Sounds like you've got us all absolutely convinced. Thank you. So if there's no questions, I'll ask for a move of the resolution, please. Thanks. And thank you, Makao. All in favour? Right, against, carried.
Thank you.
Go back to work. Thanks, Jane. Excellent. Very simple. All right, so according to the run sheet, we need to take a break, but I'm happy to carry on if people are happy to do so at this stage. Do you want to have a break?
Thank you so much. You want to see it right out?
Oh, I'd like to just get us moving if we can, if that's all right. So the next item is the rates information as at 31 January.
Thank you, Mr. Chair. I can take this one. So I guess really the high points on this are that our current year rates collection continues to track in line with previous year's performance. So as at the end of January, we have collected 87% of the current year's rates, with obviously a number of our ratepayers opting to enter into payment arrangements to spread that over the course of the year. We've also provided for you a breakdown on the remissions that have been granted so far to date, noting and compared to the last year actuals, probably the standout numbers in there are in relation to the hardship remission, that we continue to see an uplift in people accessing that. And that's really through better connection with the territorial authorities where people are accessing the DIA rebate, which is the eligibility threshold for our hardship remission. What it does mean, though, is that we only hold a budget provision of 650,000 for rates remissions, and the value of remissions that we have given is over and above that. So we will need to make an adjustment for that in the next forecast. And I believe there's still a list of those remissions to be processed. In terms of arrears collection, we've been through all of our penalty processes this year. So the last one in January, in terms of when penalties are applied. So now the team will really be focusing on that collection of unpaid rates, working with our ratepayers on payment agreements and the like. But where some of the accounts are a bit stickier, we do have the option of lodging those with a debt collection agency to try and progress collection. So happy to take any questions, Mr. Chair.
Thanks, Janine. I think just looking at the numbers, the team are doing an excellent job in terms of the difficult economic environment out there. There's the comparison with previous years should suggest that nothing much has changed. So I think that's good news. It's just an observation, and I'd just like to pass my thanks on for that effort. Anybody else have any questions of Janine on the rates information? If not, we have a resolution. Over, Robbie, and seconder from Michael. Thank you. All in favour? Aye. Against? Carried. Right. The next item on the agenda is Council Chief Executive and Director expenses for the quarter ending 31 December.
Thank you, Mr. Chair. So largely happy to take this report as read. It is provided as one of those methods for being very transparent. Although I do have to note the 2020 vision that you have when you're reviewing these reports, preparing for a meeting, and you realise that some of the numbers aren't quite right. So my apologies in relation to the director's expenses on page 126. We will update that for the next committee. There are some incorrect numbers there. I think it was the $5,500 of flights for me that probably jumped out. I haven't taken $5,500 worth of flights. So the numbers for travel, accommodation, and travel flights, accommodation and meals, and travel other are incorrect in that table. I think the information for the quarter is fine, but the accumulation of that year to date has been somewhat overstated in those numbers there. So my apologies for that. I'm happy to circulate the updated table if people would like it. Otherwise, we'll just make sure that we get that right for the next time we report to you.
Oh, thank you for that, Janine. And if you hadn't told us, I wouldn't have known. So I'm sure others in the room would be of a similar ilk. So I don't think it's really necessary to recirculate it unless others particularly want it. Angela, you have a question?
Yeah, thank you. Just paragraph 2 in the report, that elected members have exceeded budgets. Could you just go into a bit more detail around that?
Yes, so through the chair, probably the table, page 121, will illustrate that best, where you can see for the second quarter, well, for each of those periods, we've got the total spend year to date against the budget. And so in terms of salary, obviously we estimate what the movement in that may be. It's not a million miles over, and the salary is obviously set independently through the Remuneration Authority. The bigger variance is probably really in the travel time allowance for the quarter, which was 6,800 versus a quarter of the year's budget of 6,000. Now, there probably is a little bit of phasing in there as well when I look at it, because the full year budget for that is 30, so the year to date should be 7.5. So just a little bit of tidying up, I think, within our reporting to make sure that we've got that well aligned. Year to date travel allowance is within the 6-month salary budget.
So do you have any concerns moving forward, or?
No, I don't have any concerns. I think, there are clear policies in terms of what elected members are entitled to claim, and there's checks and balances over that and approval processes. It is the cost of you supporting your constituencies and the region. So,
Thank you.
Thanks, Janine. Robbie?
I'd just like to say the checks and balances on those are very stringent, and Tash is very critical of everything that we put towards that. Even if I've put in my diary that it's taken me this time, she'll just go back to the GPS setting and say, no, that's a set, there's a set. So we can't play with it. Tash is very strict on the criterion. I wouldn't question anyone's numbers that put in there, because Tash is making sure that it's pretty accurate all the time. So yeah, thank you.
Thanks for that, Robbie. If there's no further questions, Bruce, you got something?
I was just going to say, so some of the travel time stuff could be potentially improved by efficiency in the way our agendas are set. So I just wondered about whether or not there's some call to have a look at some of that, because, if some people have to travel a really long way for a very short meeting, and that's the only meeting of that day, it's sort of, yeah. Anyway, because I think there's that element of it too. It's about the way meetings are scheduled sometimes, and there is a bit of randomness in this, that we do get some days where we extremely brief encounters, and then we have others that are what I would say are more efficient, because we come in and we spend a day and we do a whole lot of stuff. Yeah. Anyway, that's just a thought.
Yeah, that's a good point. I think it's probably too late this term to make a change, but something to be taken on board for next triennium. Yeah,
and I think through the chair, the other opportunity is obviously online attendance as well, to make that more efficient. Now I know it's a different experience for everybody in terms of hybrid meetings, but if it's an hour here or there, then online is an option. But Councillor Downer is quite experienced in the joys of travel.
What you've said, Councillor Clarkson, but for instance, yesterday I went to the State Highway 3 working group, and they had COVID where it was going to be, so they shifted it to a hall. So it's a 3.5 hour drive there and a 3.5 hour drive back, and it was an 1.5 hour meeting. And I had to chair it, so yeah.
Okay. Point taken. Thanks, Bruce. All right, so we have a resolution. Executive and director expenses. Do we have a mover for that, please? Robbie and Bruce seconding. Thanks. All in favour? Aye. Against? Carried. Thanks very much. The next item on the agenda is the Tenders Board awarded contracts.
Thank you, Mr. Chair. So this is just provided to you for transparency of the procurement decisions that are being made through the Tenders Board. So any contract with a value over $250,000 goes through a Tenders Board approval process, that value being the level at which it exceeds the individual delegation of directors. So provided therefore information, happy to take any questions on any of the matters that are shown.
Just a couple of observations. I've spoken with Janine earlier before the meeting regarding disclosure of contingency provisions. I feel very uncomfortable with that, signalling that we've got contingencies in contracts. Contract sum to me is a contract sum, and that's what we should be working to, and that's what we should be putting out there. And I don't believe the fact that we've got contingencies should be disclosed, either that or it should be in public excluded. The only other question I've got, which is just a point of clarification, And that's regarding the NIWA for undertake long-term Taupo water quality monitoring. Could somebody explain what that's about? Understood Hills did our testing and Tūwharetoa did the sampling. Seems a bit of a contradiction to what my understanding was.
Just try and grab.
If you don't know the answer, it doesn't matter. I could find it from
N-
somebody
Not
else.
off the top of my head, but I'm just seeing if I can readily find this board agenda that paper went to.
That was my question too, Mr.
Okay.
Chairman.
Thanks, Makao. And the other question I had was regarding the contract variation for their maritime project management,
Yeah.
which has nothing to do with us. That's not our fault, and been assured by the director that that will be recovered out of the contract, under the contract. So
Yes,
that's really just a safety precaution.
Yes, so through the chair, I guess we are needing to acknowledge that contract extension because we will pay it, but certainly through the contractual provisions around recoveries from the shipyard in relation to those delays, which is the reason for the additional cost that will be considered through that conversation. So in terms of the NIWA contract, so this is around the water quality monitoring at Lake Taupo, which is a specific program that has been in place in terms of lake water quality monitoring for over 30 years. So it's very much part and parcel of the work that we do. It's done, the program's conducted by NIWA with assistance from DIA, obviously with their responsibilities over the lake, and the Taupo Harbour Master's Office.
So my question is, if NIWA's doing that, what do Tūwharetoa and Hills do?
So Hills are doing the actual testing of the sampling.
Samples?
Yeah. And the Tūwharetoa arrangement, we'd have to. I've got the tenders board. Does it mention, Tūwharetoa? So, yeah. So Tūwharetoa will be involved in terms of observing or being with that process. So building their capability, I guess, to see whether that could be transferred to them as well.
Sorry, Mr. Chairman. Yeah, I'm just totally confused because this is the first time that I've ever known that NIWA were doing any water quality testing, let alone a recontracting. And I've been in lots of discussions, even with Tūwharetoa and Bay of Plenty Regional Council on this. It was a first to have a regional council, get the iwi to do the monitoring of the water quality in there. So can I just, even off out of this meeting, have more in-depth information on exactly how long that's been going on for, and why wasn't that the total entity given to Tūwharetoa to do the monitoring?
Yeah, certainly. So through Tracy May would be the appropriate channel just to get some more information on what the program is. There has been a contract with NIWA in place, the most recent one since 2019. So this is a long-standing arrangement.
So can you follow that up with Tracy then, please, Makao?
Yep.
Okay, thank you. Robbie?
I'd like to go back to your public excluded discussion that you mentioned before, the water quality, water testing, but that, yeah, I agree with you. Maybe some of this stuff should be going to public excluded because we didn't discuss, or like I think it's been around the table of where we were getting deluge funding from and how much it was going towards certain projects, and then we're putting these projects out for tender. So maybe more of that needs to come into public excluded because we're basically giving out to the public what we're actually getting government funding for it for. And I don't think that should be publicly known either.
Look, I think it
was something to go away and think about.
The issue to me is now tender documents, and as you're aware, I've got one that
Yep.
I'll be reviewing. Because I've just got a feeling, which is.
But some of those contingency are 30%, not just 20% too. So that's a big number to put out there.
Yeah, it is.
And so just through the chair, as we discussed, so that contingency sits with the project manager and project sponsor in each case. So it's not that it's, the hope is that you never need it, and the different levels of contingency, which is an element that the tenders board regularly check on, because we do see a lot of variability in it. Should be based, there should be a risk assessment that informs that contingency level. So what are the bits that we don't know, or in the case of a construction contractor, the particular ground conditions that might make things a little more uncertain. So that's how those contingencies are determined. Totally get the point. We will remove that from reporting moving forward because that is an internal management tool. It's not a contracting consideration, and is not taken into account when setting the contingency. So we'll remove that from reporting moving forward.
Thank you.
Bruce, your comment?
I just want to make a comment about, I was aware of both aspects of monitoring, water monitoring at Lake Taupo, Niwa and Tuwharetoa, and we've had some quite detailed reports to us, particularly from Tuwharetoa that came in at one stage and told us all about what they were doing. And my view, just from my listening to what I heard, is that they're doing different components. And so I'm pretty sure that's what Tracy May is going to come back and tell you.
Yeah.
And there are good reasons for that too. And also remember that I would say the chemistry side of things, we also have relationships with Hills Laboratories for a good reason. And it all comes down to the different components that different people have expertise in that you need to get a full picture of water quality. It's multiple variables and multiple tests and multiple monitoring events. So I'm sure Tracy will come back and explain that.
That was my point. I wasn't aware of Niwa's involvement, and that's why I asked the question, and Makao the same. So thanks for that, Bruce. Did somebody else have a question? No. Okay. Well, if not, we have a resolution. I have a mover for that, please. So Robbie and Makao seconded. All in favour? Against? Carried. So at that point, I'd like to call a break to the meeting if people are happy with that, and then we can go into public excluded and finish the meeting. So.